Hey, welcome back to the channel, everyone. I'm Doug, the retirement guy with all the monthly ETFs. Today we're reviewing Nest Yield Dynamic Income ETF, the ticker EGGY, or called EGGY. Viewers have asked us how it stacks up against other option income funds, so I'll cover it. What it holds, how it generates income, distribution performance, keynotes, and who it may be suited for. But before we get into that, I got to do a shout out to all of our Patreon supporters and all of our YouTube subscribers. If you're not part of the family, don't be afraid to hit that subscribe button, hit that bell notification so you don't miss a single one of our videos. And if you're not part of the Patreon, I don't know why, it's free. Join Patreon. There's a lot of information behind the scenes that you can get. And if you can support the channel, you can do that there too. Let's get into today's video. Past performance does not guarantee future results. This video is for educational and entertainment only. It is not financial advice. If you're needing professional advice, talk to a financial professional advisor. So the fund overview, I'm going to tell you, it's in plain English. Structure. Actively managed ETF focused on the U.S. large cap equities, both directly and synthetically. Income engine uses options overlay, primarily covered calls for income, and a laddered protection on puts to help manage downward trends. The net assets are $63 million, and the ticker is EGGY. So this is why we say it's a very powerful egg. The investment strategies, the pillars that they use is this. Large cap stock selection, primarily US focused. The sector tilts with a technology lean. So they're putting it more into technology right now. That's the way the trend is going. The options, they do call writing to seek that cash flow. They use the put ladder to seek downside risk management. And the trade-off is options income can be capped upside when the markets are right. So we look at the top 10 holdings that these guys are into. And if you take a look at it, you will see 48% is in technology, 13% into communications, 9% into financials, 7% into utilities, and another 7% in consumer discretionaries. Notable holdings include Apple, Nvidia, and other large cap growth names. So when we look at it on the side, you can see, they have some heavy holdings. Robinhood, I've talked about Robinhood before. Nvidia, AMD, like I said, they have a ton of different pieces out there that have the large cap names. The key metric stats, the expense ratio, 0.95%. Now this one's going to be a little bit higher than some of its peers or the industry average because you're paying for that active options management. The distribution rate you can see is done monthly, and primarily the money is coming from premiums from the covered calls. Now, when we take a look at the 1-year price return in comparison, IQQQ is out there at 8.50%. That's the one price return. So that means the value of the fund went up 8.5%. QQQI has gone up 7.15 when EGGY is at 4.94. So it made the top 3 in the major competitors. IQQQI, SPYI, those are the top running performers out there that people, kind of the benchmark people put it up against. And it falls right between those two. Now remember, the price return excludes distribution. So this is just pure 1 year worth of growth. Now let's take a look at the distributions. Distributions will show you that this one recently, the distributions trend is averaging about 77 cents per month in 2025, with the most recent being at 83 cents. Now, distributions will vary. They are not fixed, but they do have a strong income generation. Now we'll take a look at the 1-year total return compensation. This is the total return, the price plus distributions. So this is what the income investors actually live on year over year. EGGY, after 1 year, hit 26.31%, the number one ETF. QQQI came in at 23.65, and IQQQ came in at 22.28. Now, notably, SPYI is 16.13. So this one, EGGY is just really taking it to the market. In our notes, EGGY ranks number one on a 1-year total return among these three. The results will change with market conditions, but when we take a snapshot of today, they are right in line. So the context since inception, another peer, SPYI, shows a strong since inception total return of 37.36%. Even as the newer fund, EGGY has posted competitive rates recently. Shorter to history means less proof through cycles, but they've shown that they come in at 26.31 is just below SPYI. Being a new fund out there, it shows they're doing the right thing. So now the key takeaways: the risk you must accept. Volatility exposure. Tech-heavy names like Nvidia and Tesla can swing. They can have some highs and some lows. The options cap the upside. Covered calls can underperform in strong uptrends. The fees, the 0.95, is a meaningful performance must compensate for that higher expense fee. Distribution variability. Monthly payouts can rise and fall. That's one big thing. We don't have a set it, forget it price. And then the tax side of it. Option income can include return of capital or other classifications like Check 1099-S. And talk to a tax pro when you get into this, because it doesn't always give you the pull back coverage. So my final verdict on this, my takeaway: 1, who might consider EGGY? Investors who are seeking monthly income, who are comfortable with equity and options risk. Those who value the active overlay to target cash flow and some downside hedging, knowing that the upside may be capped. But my real takeaway of all this, and this is opinion, not advice, based on our notes, EGGY has delivered a strong 1-year total return versus similar funds, with the trade-offs of higher fees and the tech concentration and the capped upside. For my income sleeve, I'm comfortable holding a portion long term, understanding the risks and rechecking results as the markets change. So I believe that this one here is actually a very good stock to take a look at. Past performance does not equal future results. Verify current holdings, yields, expenses, distribution histories on the fund's website before buying. And if you need personal guidance, please consult a licensed advisor.
Thank you for watching.